Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Wednesday, December 11th. We're going to take a look at RKLB today. So RKLB has pulled back a little bit. One thing that's interesting to me is you see these yellow Fibonacci extension levels. These are the same levels that we put on the chart, I think, a couple of videos ago when we really got into this no man's land of price action, right? There's not price action to go off of in this range, right? It's at 23.35 today. This single candle here was at 21.34. And then prior to that, there was nothing. So we had to put in the extension. And to me, the fib extensions always feel like a voodoo type thing until they start to prove themselves out. This to me feels like it is proving itself out really well. We'll zoom in a minute to sort of show why I think that is. But these are the levels in yellow. It's extension levels from this push here. You can see it there where I put it in. Push from that low, right, that brief sort of compression period to this initial swing high, and then the pullback, which created that initial swing low, and then the extension levels off of that move. And then this level in blue is just what I feel from that previous price action that there is. Like I said, it's really thin when you get out of the teens, but I do think there's probably something that is relevant to that 2050. So since the fib didn't catch 2050, because it has nothing to do with the equation that the fib is working off of, I just wanted to put that in as the singular support and resistance level, for now support level, that I have on the chart based on previous price action. So just keep that in mind. The blue is based on previous price action. The yellow is fib extension. The green here is uptrend support. So the idea here is if RKLB for any reason comes banging down really hard, right? Like reaches terminal velocity in a free fall. The question is, will it hit this uptrend support, or at least previous uptrend support, current uptrend support, and will that hold? That's the point of putting that in. There's so much distance from it now, but that's why I say it would have to be like incredible free fall speed for it to really knock into it hard for this to play a role. Could it hit it way over here? Sure, but that's not the purpose of it, right? The purpose of it really is to see if it catches a free fall for the time being. There's going to be so much price action that gets put in if it does sort of this thing and hits it over here that info will probably be more reliable than anything else. Somebody got really snarky on Twitter because I feel like sometimes people with like a few dozen followers or something feel the need to just be as aggressive and nasty as possible to try to, get somebody to engage with them or whatever. And had mentioned that like there's this gap down to 15, right? The high on this candle was 1502, and that's when it gapped up on this day, and then it partially filled the gap in subsequent days. That's exactly where we put the fib. And he was like, I'll grab this up when it fills that gap at 15. I think he said something like 99.99% of gaps fill or something really insane like that. So I'll buy it up when it fills that gap because it has to, and I'll get a great deal. Yeah. 99.9% get filled, then I'll load up. That's what he said. This person has 120 followers. And, sure, it could come fill this gap. Do I think in any world that there's a reason that RKLB as a stock has to come down to $15 because there's a gap there? No, I don't. I've said this for years and years and years and years. I don't know if he's referencing a different article. There is sort of the most famous article out there about gap fills. I actually, years ago, I think this was in reference to a SoFi video, I had actually reached out to that person and had some back and forth with them. I had actually at that time considered having them come and do a video with me and talk about their analysis and the ways in which people misinterpret it, which is extremely common because they don't understand data analysis. And we didn't end up doing it because sort of like that died down at the time. But I will just say my position is gap fills can be very helpful You can absolutely, I do it all the time. You see it in my videos. I'll say there's a gap here. I'm going to put a level there just to say, hey, there's a gap fill. There's a gap there. It might gravitate toward it. But again, do I think it has to, that there's some fantasy world in which 99.9% of the time Rocket Lab goes from $23.35 down to $15 because it has to fill this gap? No. Might it happen? Yes. Will it probably be for 1,000 other reasons? Yeah. Could it happen in 4 years? Yeah, that's my other thing, is this indefinite timeline, right? So it just eventually volatile stocks move through crazy ranges of price. And so then they end up filling a lot of gaps because they're volatile, they're growing, and sometimes when you're growing, you also pull back really hard. And so you just end up filling a lot of price points, and some of those contain gaps. So I will just say, could he be right in this instance? Yes. Is it because 99.9% of gaps get filled? No. Okay, moving on. I just wanted to put that out there in case I didn't look it up and see if he's just like parroting something that's just incessantly talked about in the Rocket Lab community out there. I don't know. I'm not part of the Rocket Lab community. I'm sure there is one. But just in case people have been sort of incessantly hearing that, those are my 2 cents. You don't have to believe it. You can believe whomever you want, but that's my stance on it. And those are the reasons why. Maybe if there's really incredible interest, I could just reach back out to the guy who did that study, and we could end up doing that interview on the channel that we didn't do at that time. So, oh my God, look at this. From the after hours market to the pre-market, there was this big gap up, and it immediately filled it on open. Holy smokes. But yes, that can happen. That can be really useful to look for, and know that there could be gaps in volume through there. So yeah, it could be a real thing. But back to levels. So we're a few days back here, right? If we go back to like toward the end of November, we look at these fib levels, right? Spends the day wrestling with this 22.93, gaps up like we just said, wrestled with that 26.44, couldn't hold it at all, slipped right through this 24.38, came down, ultimately tested this 22.93 again, and came up and found resistance right at that 24.38, right? And we see this constant maneuvering of hitting its head, double resistance points there or more, and then breaking through, hitting resistance right in the range of the next level that we have, coming down hard and catching a level that we have on the chart. So, and this isn't because we have tons and tons and tons of levels on the chart. We have what the fib gives you from 1680 to 2906. We have 3, 4, 5, 6, 7. And that's a huge percentage price range, right? So to me, these are holding up really well. And if you zoom in to intraday and you just sort of like work off of them, again, they're doing really, really well. It's not needed as of late to come down and press toward this 21.48 when it's fallen through, right? It's very quickly recovered back to that 22.93. This may be indication of additional bullish strength, sort of compressing or compiling in the recent days. I don't know. We'll have to see. But to me, it is interesting when we have levels on here that it sort of shies away from and it gets bought up ahead of those, and yet continues to push the levels above the one that it's sort of not coming down to. My sort of one concern there would be if it does dip down into 22, right, high 21 to 22 range. How often are how long do the buyers continue to show up in that range? My hypothesis is often that eventually you exhaust buyers on dips, or you eventually exhaust sellers on non-dips, on pushes, and that's where you see the breakthroughs, right? Breakthrough to the upside, breakthrough to the downside, and so that would be my question of how much more are buyers willing to take on Rocket Lab in the high 21s to 22 range, especially if it's sort of returned to that range. If we count this candle here, it's returned to that range 3 times in 3 days. So if that's what they're seeing, there's a number of folks who are just sort of I'll buy it right around 22 or high 21s, and it keeps coming back to it day after day after day. First of all, how much buying power do those people have? Second of all, how much staying power do they have, right? How much can they say, oh my God, like I'm not getting the return out of this that I'm looking for, yet I continuously load up in this zone to just break even over and over and over again, or to be back at break even over and over again. Not to say that they're exiting their positions, but that would be my question. Like, when does that just sort of wear thin on them and they don't show up anymore? Now, I actually hadn't looked at this, but let's see if there's anything interesting with the EMAs. There may not be. Yeah, a little bit. It's at least engaging with the 8 EMA. And for now, at least, sort of wrestling with that range while it pulls up this 21, this peach colored EMA. And may start engaging with that soon. I would be most interested to see what it does with that. We see back here, it popped right off of it, which is what you'd want to see. And it hasn't engaged with it since then. So since here, when it had already seen a nice lift, we'll say it, I wouldn't say that's a pop, but it's a nice lift. And then when it made contact with that, that's where it really popped up really hard. So again, if there is this potential for additional bullish momentum to be exhausted, based on these recent dips getting bought up consistently, that's what I would look for. It's sort of like tomorrow, or at least sort of like by the end of the week, if it continues to be in the same zone, doesn't have a big gap up or gap down, then I'd want to see it hold that or pop right off of that 21 EMA really strongly. If it doesn't, if it kind of waffles, wrestles around with it, or certainly if it comes down and tests the 34, it doesn't say that it can't continue to push higher, but it would maybe bring in more questions for me than if it popped off of the 21. Volume through this range, we zoom out a little bit. Here's what we're talking about in the gap, right? You see there's no volume there. And so this is what people sort of fixate on, which again is fine. Yes, it is useful, but okay, enough of that, Daniel. But we have a nice shelf here, right? It is getting eaten up at that shelf. Again, my question is, if you get below that, right, and those buyers dry up, like I just said, then it gets really thin for a few levels, right? And then you're sort of maybe looking at folks stepping in hard around 20. But, that's a pretty sizable pullback. Certainly you're probably feeling good if you bought in at 7 or something like that. But, it's going to give it a different look. It's just like, then you might really be looking at, okay, 15 to 16 feels really close if we start pressing to 20 and needing to rely on these volume shelves in like the 19s that stretch all the way into the 18s, right? Then you're feeling maybe uncomfortably close to that gap level. So, and over here in the Thinkorswim, this is kind of interesting. To me, nothing super interesting about the TTM squeeze indicator down here. Phase oscillator, for how aggressive the move has been, this is way down at 32 at the moment, so getting like very close to compression zone. So interested to see, what that bears out. And we have like a really wacky kind of setup. I haven't really seen this. I'm sure it has happened elsewhere at some point in time, but I haven't really come across this before. So it exploded through these November ATR levels. And then by the time it got into December, right, it had recalibrated itself to associate with the levels to which it was still at. It rejected right off of the call trigger and pushed in one fell swoop down through the base ATR, the put trigger, the initial ATR target, and the full -1 ATR. And then has pinned itself below that -1 ATR. So, if you just sort of look at this setup, and especially if you're not looking at the channel here, this looks mighty nasty, right? Because you have this wide range of space, and now it's pinned below the ATR levels in the current month that you're at, and it doesn't look superb, and it keeps wicking off of it in the last couple of days at least. If you bring into it what we have here, the wave cloud, you do see the diminishing bullish momentum, but you also see for now at least, the channel holding up. And you see it not needing yet to make contact with the mid-range of the channel, this bright blue, which is what we often look for as a potential entry-exit point, right? It's going to hold or it's going to break down, especially like after a move like the one that we've seen. And so being that it's so close to that, sort of it'll be telling in the days ahead, what the reaction off of that looks like. And if this wave cloud starts to really get pointy, then things could look, a little bit dicey. Right now, we see the width, right? The width of this green cloud situated above the blue cloud. If that starts to get thinner and thinner and thinner, starts to appear like the beak of a bird almost, right? Like really pointy like that, then, that's where things might sort of accelerate and break down relatively quickly. But we'll see. For all intents and purposes, is holding in the green wave cloud for the time period, showing that it's wanting to get bought up ahead of the mid-range of the channel. So we'll see if that continues to be the case or not. All right, folks, this was a lot longer than I thought it was going to be, but if you watched this far, I appreciate it. Happy hump day. And as always, I will see you in the next video.